And then we have over here, they're even saying Coinbase. I guess we could pull that up. Yeah, Mario Naufal. Is CZ implying Coinbase custody does not hold one-to-one BTC? So yes, CZ basically had a tweet inferring that, but he deleted it. But I mean, I think the problem is Coinbase's solvency is dependent on more than just having assets backed one-to-one. Well, first of all, yeah, this is CZ's tweet. Coinbase holds 635,000 BTC for Grayscale 4 months ago. Coinbase, I assume, exchange has less than 600K BTC. So he's just making that presumption, just stating news reports, not making any claims. Glassnode probably has more up-to-date data. So then he redacted it. But then we got here a little thread. So this is really the meat and potatoes, because Coinbase remaining solvent is more than just them being backed one-to-one. They could still go out of business, because it says here the bonds are trading at a massive discount, which means that creditors don't trust them, which is not good, because that means that it's going to be very hard for them to borrow money. And a lot of these companies rely on borrowing money. And then in May, it says that the CFO warned there's a small risk of bankruptcy. Brian Armstrong is defending the company's financials. Yeah, and that's the tweet from CZ, quoting bitcoinist.com. But it's more regulated. Unlike FTX, Coinbase is an SEC-regulated company with much higher reporting standards. So they also have to be more transparent. According to their latest 10Q, Coinbase sold over $95 billion in customers' crypto assets, plus $65 billion in US dollars held on behalf of customers. Shows their balance sheet. The stock is down 83%, which is horrible, because they're a growth company. They needed to sell shares in order to raise money. So they're extracting less and less liquidity from their stock. And obviously it's not good. They probably rely on, debt and getting money from issuing bonds to creditors. And here's another thing. So they require high trading volume to make commissions from the fees to cover the operational costs, quote, massive operational costs. But with cryptocurrency in a bear market, that trading activity is drying up in two ways. Customers' accounts are less valuable, right? So they can't extract as much value from the fees, because the fees are a percentage of the trading volume. And the lower interest rates in crypto means people will trade less often. And the lower interest, in crypto means people trade less often. So that's, I think, the big thing right over there. It's like people are saying, Coinbase, get this out. Get rid of this. There we go. People are saying basically that Coinbase is relying on, like, oh, they're not backed one-to-one, and then Brian Armstrong is saying they're backed one-to-one. First of all, it's a little fishy that Grayscale, Bitcoin Trust, and Coinbase are refusing to do an audit, to have an audit, to ensure that they're backed one-to-one. They're saying it's for security reasons. It's basically, you have to take them at their word for it. But exchanges in general don't have a good track record of telling the truth. But obviously, it may or may not be true. I don't really know so much about how that works. And they gave a thread. I don't know if they really gave such a great explanation. Maybe they did. Maybe they're back one-to-one. Maybe they're not. But even if they're backed one-to-one, it's more than that. For them to stay solvent, they have to be making money on. They have to be able to borrow money, which obviously their bonds are selling at a huge discount. So it's probably hard for them to borrow money, and they have to be able to make money off trading. And there's not a lot of trading going on, and that trading and the assets that are being traded have lost so much in value. So that is not looking good. But I guess and their stock's down over 80%. There was like a tweet I saw. Someone was saying Jim Cramer said that there was a tweet of Jim Cramer saying, I like Coinbase at 475 or something. Yeah, we know his track record, but That's really the overall point, is that Coinbase being solvent it relies on a lot more than than just being backed one to one. And Coinbase like not going down, I guess. So if they go down and they're back one to one, would that lead to that? That would probably be very bad for the markets.